Good afternoon and welcome to the Theo Trade Afternoon video. I'm Blake Young and today is May 15th, 2025 and we're going to start looking overseas. And so the market has been showing us a lot of frailties or weakness in the overall economy, whether we're talking about financial data or economic data. And so we're seeing some misses. We're seeing some setups that are showing us that there's some weakness in the US economic area. Regardless of the bounce that we've seen in U.S. equities, the economy actually is still showing some fairly negative signs. So if we go over and look at Forex Factory, just this last week, you can see negative, 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 all the way down. Retail sales was up a tiny bit. Empire Manufacturing down a lot. And Philly Fed is negative, but less negative than we thought. So it's less bad. But overall, across the board, the only bright spot we had so far this week is retail sales being up from 0% to 0.1. I would not consider that a major win to see a 0.1% month-over-month growth on retail sales when everything else is showing negative and slowdowns in the U.S. economy. As we're watching this, if we look at other countries, or should we say other economies, we can see positive, positive, positive as far as the business survey, inflation data, and growth. And that's in Europe, in the Eurozone. And we can take a look at that and apply it to any number of countries, and we're going to see that there's a lot more green on these charts than there is red. Now, Canada is tied directly to the US, and so there's more negative here, but the UK has positive data. The Eurozone has positive data. Even Canada has more positive data than the US. And this got me to thinking maybe the big overall shift and turn is going to see some growth in overseas economies. Even if the U.S. does recover from this point, could we see better growth inside other countries? Looking at the euro versus the U.S. dollar, the number one currency pair trade in the world, this trades about $3.5 to $4 trillion a day. This dwarfs the entire New York Stock Exchange quarterly and what the euro does every single day. So every single day, the euro trades more than the New York Stock Exchange trades in a quarter. So watching this, we're at this inflection point based off the monkey bars. We've coiled up inside this range after a huge sell-off of the dollar. This is euro strengthening, dollar weakening. And right through here, we're coiled up at this monkey bar level. So this could go either way. But if it does go up, the dollar weakens, then we would expect further strength in the Eurozone, further strength in the euro itself, and we're already seeing positive economic data. This has me looking for these ETFs that represent these different economies. And we're going to look at 4 specific ETFs that tie us into different economic views in different countries. So we have the first one, which is EFA. EFA is a broad ETF that represents Europe, Australia, Asia, East Asia, and so it can be a pretty good representation of some diversification kind of to the South Pacific while also adding some European exposure here. Now we've already recovered not just like what we saw in the equities. Equities fell down, we saw US equities climb up here, but comparatively it's like the US equities stopped here and EFA continued to move. We've cleared out the highs, we've cleared out the 52-week highs. In fact, we put a new 52-week high in today. Normally, I would say that's enough reason for me to buy. I'm looking at this to give me a small pullback, maybe to 84, and then back up because we have a bearish divergence and we're a little bit overbought. But this is likely in a long-term uptrend. So any higher highs, higher lows, breakouts, or bounces in the uptrend, I'm interested in trading EFA. Similarly, we have EEM. This is emerging markets, and it's going to give us a similar pattern, but this is again a diversified exchange traded fund. So we're looking for diversification inside this EEM, and you can see that we have also cleared out the 52-week highs here, or at least the highs back through this calendar year. And we made higher highs, higher lows, higher highs, higher lows. We still have some upside. I am being careful of the fact that we could create a bearish divergence, but this peak here was 89 and this peak here is 90. So officially it broke the divergence if we're using the last peak. Tells me that I'm okay with a pullback, a bounce maybe off of 45, where I'll be looking to go back up to 48 and possibly all the way up to 52 over the next couple of months. EEM is the emerging markets and a great diversification against the smaller countries and companies that are in those smaller countries. If we're resolving issues with tariffs, these smaller countries could actually come out as the heroes and the big opportunity as business resumes in this environment. if we're going to look at country specific, and we assume that the euro is going to strengthen and the European economy is going to strengthen, then we'd be looking at the strongest of these, which is Germany. Germany is the largest economy inside the European Union, and so EWG could be a good substitute. We have the similar price pattern that we saw on EFA, that we reversed all the bearishness. We made new 52-week highs. This 52-week high happened a few days ago, and again, we're still overbought. But the bearish divergence pulled back already, and it looks like we're set to continue to move higher. It might be worth taking a bite of this now and looking for it to go up to 44. There's a 10% move there, potentially up to 46, assuming that our distribution model works and we close past the 41.50 mark. This would be favoring Germany, and this gives you exposure to the euro. The last one is not FXC, but it's going to be EWC. But before we get into EWC, which is the Canadian economy, FXC is where we're going to start. Now, FXC is showing you the Canadian dollar versus the US dollar. The Canadian dollar ran up, strengthened, and pulled back. So this is US dollar straight, Canadian dollar weakness. We're in an area that is oversold, and this is the kind of pullback I would look at, and it might be worth just trading the Canadian dollar long out of this monkey bar area and trading it from 69 up to 73. But this should also be supported in the view that we're going to see on EWC. So EWC would be betting on the Canadian economy to grow versus the US dollar's strength. And what have we got here? Even a stronger. This is the strongest of all of the charts that we've seen in recovering off of those lows that we had this last month of April, trading to and through the 52-week highs, and we've continued marching higher. Now, again, we're up in this overbought zone. It might be worth letting it pull back, but this is a 52-week breakout, and we've disrupted any chance of getting us a bearish divergence in here. If this can sustain the move, which I think it can based off of where we see the US dollar Canadian dollar pair or the Canadian dollar ETF, then this breakout would have me looking for 47. Again, a 10% move to find that next fair price. Overall, this is a time to consider looking for diversification outside of the US, even if the US is in recovery. It's not a matter of saying we're betting on all these other countries and the diversified ETFs that are placing investments into other countries. It's, do those other countries have the potential to grow equally or faster when we adjust for the currency in the EFA, EWG, EEM, and EWC? And if they do, this is a way to diversify away from the uncertainty of the tariffs while continuing to take very strong trends that have obviously outperformed the US equity market over the last month. And that continuation could give us 10% or higher returns on every single one of these ETFs that have that overseas exposure. One of the things you can do, going back one more time, is look at that euro. And if you're looking at the euro from the perspective of the front month currency future, then what you'd be looking for is the confirmation that the dollar is weakening comparative to the number one currency pair, which is the euro versus the US dollar. So if we close above here, that's going to be confirmation to take us back to 116, maybe up to 120. It could be worth trading the euro futures long, or the euro US dollar pair long, or the dollar index short using options. But overall, if this goes higher, I'm looking for that move up to 116, even 119, even 120, and that's a strong move for the currency, which would support the idea of these emerging markets and other country ETFs. That's going to do it for me today. Thanks for watching. Join me again tomorrow in the main room as we continue to look for opportunities in this wild market and this uncertainty. While there is still uncertainty, there is still opportunity. Thanks for watching.